Hi, thank you for joining us. Now, today I have Wanda Norge. She's a mortgage broker and she specializes in helping people through the mortgage process during divorce. And she's going to tell us a little bit about why it's important to get pre approved. So, thank you, Wanda, for being here.
Thanks, Leslie, for having me. This is always so exciting. I have been in the mortgage business for about 18 years now, and I'm currently a mortgage broker. And what that means to clients is that I have access to a lot of different lenders across the country. And basically, I'm a happy shopper. I get to shop for rates for people, and it's fun. In terms of being in the business this long, I have gone from working a lot with first time home buyers initially and then move up clients. And now, I get those calls of, Wanda, we're getting divorced. Well, as part of what I like to do is always have good education, and be knowledgeable about what it is we're doing, right? And especially since I look at the mortgage as a financial tool, not just as a transaction. And so when they offered training specific to divorces, I did go ahead and get certified as a certified divorce lending professional back in 2014 when it was first being offered. And it's been very valuable to have that education because people don't realize how many different things can be affected during the divorce process that you need to pay attention to in terms of just getting a loan. And so my whole thing is that I like to have people, I like to promote that you get pre-approved for your divorce. Just the same way that people get pre-approved to go buy their first home. We're looking at the same stuff, but a little bit more than that, because by that time you typically have a lot more invested in maybe the relationship, in your asset accounts, equity in the home. There, of course, children possibly involved, that kind of thing. So there's a lot more to consider and be able to help you succeed from when you're going through your divorce. So I'm going to just run through a few things that are key that we look at as part of the pre-approval process. Obviously, one of the first things that when you're going through the process, you're going to want to get a credit report. And I will always pull that myself as well as part of the pre-approval, but you can get a copy through annualcreditreport.com. And each of the three bureaus, Equifax, TransUnion, and I forget the other one now all of a sudden, but the three of them there, you can stagger those so that you can get one, say, January, and then get another one 6 months into it, and then another one down in December or whatever, so that you can kind of monitor your credit through the divorce process. Because what's really key is looking right away, what are the joint accounts on there? You're going to want to, identify those so that you can either get refinanced off of them or maybe closed out or whatever it is, so that, if they're joint, you're partially responsible no matter what you guys put into the separation or divorce decree. From a lending standpoint, if, Johnny gets assigned the Jeep loan or whatever, and that's fine, we can exclude that $800 payment against you when you're getting qualified. But the creditor that you originally signed the documents with for that Jeep loan, they're still going to want their payment, whether he makes it or not. So if that doesn't happen, where he's making the payments on there as, the separation agreement says, you're still going to get dinged on your credit. And that can hurt you going forward in terms of getting pre-approved for a loan. And that's even more important if there's mortgages involved, because if one person is assigned, a particular loan, say there's two properties involved and you both have loans on them, and he's staying in one and she's staying in one, well, that's great. You still got to make sure the other person's paying the bills on the other mortgage, because it can still hurt you, especially a mortgage late. It can really count against you in terms of the guidelines where it requires, that you don't have any mortgage lates maybe in a year. Some of that's relaxed, but you still want to be careful that that's all, not going to hurt you down the road there. So, we're looking at those kind of contingent liabilities and your credit scores and that kind of thing. So you're going to want to look at that up front. The other thing we have to consider too is, of course, the income qualifying in terms of, let's just say there's a stay-at-home mom and she wants to stay in the house with the kids. Well, of course, now there might be separate maintenance money or child support money that has to be received a certain amount of time in order for it to count for your approval process, and it has to continue past the mortgage note date at least 36 months. And sometimes there gets to be a very tight squeeze in there based on what is put into those separation or divorce decree agreements. I'm dealing with one right now that is very tight like that. We're going to maybe just squeak by and be able to have enough. One of the things that comes up sometimes is the timing also, in terms of, I get the question, well, can I go ahead and proceed with buying a property while I'm still married? The thing you want to be aware of there is, yes, you can, but we're going to want to see that in a separation agreement that maybe the other person has no claim to that property afterwards. All right. Because what's important for you to know is that if you're buying something during the marriage process where you're still married, it's marital property. That person could still come back and, especially like in Denver where the property values have escalated so much, they could feel that they have a right to some of that equity. You may end up having to sell the property that you have just bought if there isn't something clear cut in an early separation agreement on something like that. And, there's other things that we want to look at in terms of title vesting, who owns title now on a property, and do you have to get on there first before you can do a divorce buyout or that kind of thing. So there's a lot that we have to consider as part of the whole pre-approval process. So I just recommend people get involved as early as possible with a mortgage person, either myself that, is certified in this, or we have several others that, also we have networked with that are very good at this job as well. And, as part of what we're doing, we do partner with lawyers and mediators and financial planners and psychologists and counselors. And so it's a nice little networking group of people that will help you succeed with your divorce. And that's really what the key is.
It's so true. Thank you for going over that. But I know that's one of the first things we do in the process. When I take a couple through the mediation process, the house is usually the biggest asset. And trying to figure out what to do with that is not a cut and dry thing. There's a lot of different possibilities. And although somebody might want to keep it and they've agreed to all this, well, now if there's not the income is usually the problem. Being able to stretch that income over the two new properties. And that's why it's nice to use, like when I'll call you up and say, hey, you help the husband and the wife, because the maintenance number, if there is going to be maintenance, is key. You can't have, so much maintenance being paid out. You might need a certain amount for the wife to get, the person who's receiving the maintenance to get the property. But is that amount going to now disqualify the person who's paying it or the husband?
Right.
So we really need that balance. And that's why I really strongly suggest to use the same person. And I love calling you, Wanda, because you'll answer. You'll answer the phone if you can. And we can always get some numbers and get those, right at the beginning, start figuring out what to do with the house, because that really is one of the biggest assets. And I appreciate you going over some of that.
Absolutely.
Well, can you tell us how best to get a hold of you if somebody did want to give you a call after watching this?
Yeah, sure, Leslie. That for me, my cell phone is 303-419-6568, and they can always reach me on there, and I we'll text back as well. Otherwise, they can reach me on my email is always a good spot. I'm usually always on there 24/7, and that's at loans@wandanorge.com. So either of those is usually the best place to reach me.
Awesome. Well, thank you for sharing that with us today. And I really do appreciate your time. It's great.
Thanks for having me, Leslie. It's always wonderful talking with you.